Okay, so once again, hello, assalamu alaikum. This is your teacher Azka, and today again we are going to start accounting paper for O levels and IGCSE. If you can see this, this is May June 2024. This is May June 2024. We have 1 hour 45 minutes to solve this. Okay. So we are going to start from the very end. So from here. Okay. So we have the question number 4. If you can see, I think you just zoom in. Yeah, I think now that's right. So Ahmed owns a trading business. Okay. He prepares his financial statements on 31st December each year. Ahmed had some unused office space and he decided to use some of this to store inventory and to rent the rest to Bilal. Okay. So Bilal is basically his tenant. On 1st January 2023, Bilal started renting the office space. Okay. So from 1st January 2023, I should highlight this. From 1st January 2023. Yeah, okay. Uh, so Bilal started renting the office space from Ahmed. The annual rental charge is 4,800. Okay, so this is the annual rental charge. So if you just divide 4,800 by 12, so basically we just want to find out that what would be the monthly rent. So 4,800 divided by 12, so we have 400. So it means that for 1 month rent is 400. Okay. Um, During 2023, Bilal paid the following amounts of rent into the Ahmed's bank account. So these are the amounts. So on 1st April, he paid 3,600, and on 30th September, he paid 2,400. So if you see that for 1 month, the rent should be $400. So if she paid 3,600, so 3,600. Okay. So if you just want to find out for how many months he paid this $3,600. So 3,600 divided by 400. So he paid for 9 months. So he started renting on 1st January. So January, Feb, March, it means that 4 months was accrued. And on 1st April, maybe she paid 9 months rent, 4 months till April, and maybe 5 months would be the prepaid expense from the Bilal side, and the prepaid income for the Ahmed. And on 30th September, she paid again 2,400. So 2,400 divided by 400. 2,400, 2,400 divided by 400. So it means that she paid 6 months payment. So from January to September, I think it became 9 months, I guess. January, February, March, April, May, June, July, August, September. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yes, for 9 months she paid this one, 3,600, and at the end of the September, She paid for 6 months. So it means that October, November, December, January, February, 1, 2, 3, 4, 5, and March. 1, 2, 3, 4, 5, 6. 4. So she paid for October to March. This is the advance payment. Okay, so now let's see the question. Okay. So prepare Ahmed's rent receivable account for the year ended 31st December 2023. Balance the account and bring down the balance at 1st January 2024. Okay. So first of all, we receive these two amounts, so that's why we have to record this here. 2023. So in 2023, we received $3,600 on 1st April. So we have to make the entry for bank. Rent receivable is the income account for Ahmed. So income account would credit and bank would be debit by 3,600. And on 30 September in the same year, in 2023, he paid 2,400 to Ahmed. Okay. So that's why income would be credit because income's nature is credit and bank would be debit by $2,400. Okay. But in income statement, we will not transfer this 3,600 and 2,400 all together. If you see, first of all, uh, if if you see that for how much month we should transfer to the income statement, first of all, you have to know about this thing. Okay. So as I told you that she paid this $3,600 from January to September. But the year is basically ending on 31st December. Okay. So it means that this $3,600 is related to this year's payment. And after September, how many more months remaining? Till December, because our year is ending on December, 31st December. That's why we have to just calculate the months 1, 2, and 3. So it means that 3 months payment is because she paid $2,400. So it means that 3 months payment is related to this year and the remaining payment is related to the other year. It means that for 2024. Okay. So we need 3 months, 3 months payment. So for 1 month, this is 400. So multiply this with 3. So 1,200. So 3,600 plus 1,200 is equal to 4,800. So it means that 4,800 should be recorded in the income statement, because in the income statement, we should only record that income which is related to 2023 year, which is started from 1st January and ending on 31st December. So that's why we should write income statement 4,800 here. So at the year end, we will debit the rent receivable account and credit the income statement account, okay, with 4,800. So yeah, so 3,600 and 2,400. So this will give you 3,600 plus 2,400. So this will give you 6,000. So 6,000 minus 4,800. So this is 1,200. So as you can see that the debit side is the shorter side. That's why we have to write it here. This is 1,200. And we will be transferring the 1,200 in January 1st. So as you can see, this 1,200, it would be the prepaid income, okay, for Ahmed, and prepaid expense for the Bilal. Okay, so now let's see the other part. Ahmed sold old coffee equipment for $1,350 on 3rd January 2023 on credit to Rahat. The equipment had been purchased for $3,200 on 1st January 2021. Okay, so this is the cost. So cost for this office equipment, which is $3,200, and The sale proceed were 1350. This is a sale proceed. It means that this is the amount which we receive from the rahat to sell our non-current asset. Okay, so Ahmed charges depreciation at 25% per annum using the reducing balance method. It does not charge depreciation in the year of disposal. Okay. So basically, Ahmed sold this office equipment in 2023. So it means that we should not charge depreciation for 2023, but we would charge depreciation for 2021 and 2022. Okay. And he is using reducing balance method, and 25% is the rate. Okay. So first of all, we need to find out its depreciation. So the 200 is its cost, multiply 25%. This is a depreciation for 2021. So 3200 multiply 25% divided by 100. So this is 800. So this is the depreciation for 2021. And now 2022. So since we are using reducing balance method, so first of all, we need to calculate its net book value. So 3200 is a cost minus 800 its depreciation. So 3200 minus 800. So 2400 would be the net book value. And now we have to multiply this with the rate, because in RBM um, we apply the rate on the net book value. So 2400 multiplied 25 divided by 100. So this is 600. So 800 for the 2021 and 600 in 2022. So for 2 years, 800 plus 600. Its total depreciation 800 plus 600. Its total depreciation would be 1400 for 2 years. Okay. Uh, yeah. So it sold in January 3, 2023. So we have to write its provision for depreciation, which is 1400. Okay, 800 plus 600. And we are basically preparing a disposal account. So we know that when we will be going to dispose of any non-current asset, so we have to debit the provision account and credit the disposal account. That's why disposal account is credit and provision is debit. And okay, so we received the amount which is 1350 from Rahat, and this was on credit. So that's why we don't need to write bank here. Yes, of course, if we receive the money from Rahat, so at that time we would have been recording this the entry disposal credit and bank debit, but now entry would reverse. We will be writing Rahat instead of bank. So disposal account credit, Rahat debit, because we supposed to Rahat is own money to us. So that's why. And of course, if we are going to sell the non-current asset, so we have to credit the asset account. So that's why disposal account debit and office equipment account credit with $3,200. So we need to write its cost here. Okay. So now we have to see that how much uh, uh, did we gain on disposal, or did we lost on disposal. So first of all, we have to find out its net book value. So its cost was 3,200. Its depreciation is 1400. So 3,200 minus 1400. 3,200 minus 1400. So this is 1,800. So 1,800 is the net book value, and we receive 1,350. So this is the loss. 1,800 minus 1,350. So this is the loss of 450. So income statement debit and disposal credit, because in income statement all losses and expenses would be debit. Okay. So now let's see the C part. Complete the table by placing tick to indicate whether each amount of spending on the new inventory storage space is capital expenditure or revenue expenditure. Okay. So revenue expenditure means the expenses you have to incur for revenue. Capital expenditure means that the expenditure which you invest for purchasing the non-current assets, and this is one-time expense. This is multiple times and recurring expenses. Painting the walls of the storage area. So painting the wall of storage area is not a thing which you will done only one time. You have to maybe do this multiple times, and this is again, you are not purchasing something which is fixed in nature. That's why this would be your revenue expenditure. Shelving for a storage area. So yes, you are shelving. So it means that shelving will be remain the same for so many years. This is the capital expenditure. Installation of shelving. This is also a capital expenditure. Light fittings for storage area. This is also because this is a new thing which you and these lightning would be remaining for the longer period of time. So this is the capital expenditure. Light bulbs for the storage area. Yes, so light bulbs, the thing which you can say that you have, this is the recurring in nature expense. It means that you have to maybe, change the bulbs multiple times in a year. So that's why this is the revenue expenditure. Okay. So we have the other information. Ahmed's result account at 31st December 2023 include the following balances. We have this inventory. So this is opening inventory, and this is the year end. This is the open year start. So this is the opening inventory. Receivables 6180, and cash which is 175, payables 5500, bank overdraft 640. Amazon inventory at 31st December 2020 was valued at this one. So this is the closing inventory. His purchases for the year ended 31st December 2020 were 97,000. Okay. So first of all, we have to find out the rate of inventory turnover. Rate of inventory turnover. So for finding out the rate of inventory turnover, okay, so for finding out the rate of inventory turnover, we use a formula, and the formula is cost of goods sold divided by average inventory. This is the formula, cost of goods sold divided by average inventory. So for finding out the cost of goods sold, we have a formula, and the formula is opening inventory plus purchases minus closing. So opening inventory is 9,000. Okay. And these are the purchases, 97,000, and the closing inventory is 12130. And how can we find out the average inventory? First of all, average inventory, if to find out the average inventory, there is one more formula. You have to add opening inventory and closing inventory and divide it with 2. So as you can see that this is the opening inventory, this is the closing inventory divided by 2. So this will give you 9,000 plus 97,000 minus 12130. So this will give you this answer. And 9,000 plus 12130 divided by 2. So this will give you this answer. So divide it, and you will have 8.88 answer, uh, which is rate of inventory turnover. It means that in a specific time, you are changing your inventory, you are purchasing inventory 8.88 times. Now we have to see the current ratio. So what is the formula for current ratio? current assets divided by current liabilities. So in current assets, we have the closing inventory first, which is 12130, and we have receivables 6180 and cash, which is 175. And the liabilities would be payables and bank overdraft. So these are the current liabilities, and these are the current assets. Okay, so now multiply, divide. So you have 3.1 into 1. So it means that for each $1 liability, you have $3 of assets. Now we are going to see the liquid asset test ratio. So liquid asset ratio would be similar, but yes, we would not include the closing inventory. We would only see the receivables and the cash. So this is the receivable, and this is the cash, and this is the current liability. So if you just divide it, so you will be having 1.4 into 1. So it means that for every $1 of liability, you have $1.4 of assets. Ahmed's rate of inventory turnover for 2023 was lower than 2022, suggests two problems which may be caused by Ahmed's lower rate of inventory turnover. So first reason would be a lower turnover rate may suggest that Ahmed issuing excess inventory, which can lead to storage and maintenance. Number two would be slow sales or poor demand for all uh, Ahmed's product. So this is one more reason that why there is a low rate of inventory turnover. So I guess we just completed the question number 4, and now we are going to move forward to see question number 3. Okay, so Zohra and Pania are the shareholders and directors of Q Limited. Company directors of Q Limited have provided the following trial balance. So this is a trial balance, and we have to prepare the income statement. So income statement, first of all, we have the revenue. So as you can see, the revenue is $78,000, and after that, we have to find out the cost of sales. So the opening inventory, which is 2950, and this is the closing inventory, which is 4720, and I think there is maybe nothing else. Inventory, yeah, purchases. So we have purchases, which is 3820. Okay, so opening inventory is 2950, but it is worth 3820, and the closing inventory is 4720. So you have 36430 is which is the total cost of sales, and now deduct the cost of sales from the revenue. So you have the gross profit, which is 41570, and now we have to deduct the expenses. Okay, so first of all, we have rent and insurance. First of all, I think you should see this one, the notes. So this is the closing inventory. We already know about it. Uh, the second adjustment, depreciation on fittings is to be charged 10% per annum in the straight line method. Payment for advertising, which is $75, is outstanding at 31st January 2024. No dividends were outstanding at 31st January 2024. Okay, so it means that there is nothing, we don't need to write something in rent insurance. So just copy paste the rent insurance, which is 10,600, director salaries and journal expenses. Okay. Rent and insurance, director salary, general expenses, but in advertising, we have to add some expenses because these expenses were accrued. We are preparing it for 31st January 2024, and these expenses were accrued at 31st January 2024. So we have to add this $75 because we have to add this whether we paid this or not. It's not necessary if it is related to this year's income statement. So you have to add 75 in the total advertising expense, which is $5,400 plus 75. Okay, and this would be add into this. Okay, and after that we have to write a depreciation for fitting, uh, and it's a cost because they are using the straight line method. So that's why a depreciation rate would be applied on the cost. So fittings at cost is $18,000. So just multiply it with uh, the 10%. So you will have the answer, which is this one. Okay, which is 1800. So these are the total expenses. Dividend paid would not be the part of expenses. That's why I didn't write here. So these are the expenses, which is 40295. And now deduct these expenses from the gross profit. So 1275 would be the profit. Okay, now they are asking us to calculate the retained earnings at 31st January 2024. Okay, so we will be having calculate retained earnings at 31st January 2024. Okay, so first of all, we have to see the information. Okay, um, so we have the information related to dividend paid, okay, during the year, and we have the ordinary share capital, which is 13,000, retained earnings, which is 22970. So this is 2297 is related to, this is the opening years retained earning. Okay, it means that this is related to uh 1st December, 1st December, no, not 1st December, basically 1st Feb. Yes, this is the opening balance of 1st Feb 2023. Yes, this is the information related to 1st Feb 2023, and we need to find out the retained earnings for the closing year, and the closing year is 31st January 2024. Okay, so how can we find out the retained earning? Now this is very simple. First of all, we have to write the opening balance, and we just find out the profit for the year. So we have to add this, and we have to deduct the 2400, 2500, which is dividend paid, and at the end, whatever the balance we received after paying the dividend, this is our retained earning, which is 1070 after deducting the dividend payment. Now we have to prepare the statement of financial position for Q Limited. First of all, we have the non-current assets. This is the cost. This is its accumulated depreciation. If you just see this one, yes, this is the provision. It means that this is the accumulated depreciation. These assets has depreciated till now with the $5,400 amount. And 5,400 was the previous, and I think for this year we find that its depreciation was 1,800, so altogether this is 7,200. So 7,200 would be its depreciation, and its net book value 18,000 minus 7,200, so 10,800 would be its um, net book value. Okay, so we recorded the non-current assets, and now we have to write the current assets. So in current assets, we have inventory and bank. So inventory is 4720. This is the closing inventory because the closing inventory would be the part of current assets. And we have bank, which is 915. So this is 16435, which is the non-current assets and plus current assets, total assets. Now we have to write the equity and liabilities. So in equity, we have the share capital, which is 13,000, and we just find out the retained earnings. which was equal to 172. If you remember, this is equal to 1072. Yes, 1072. This is the closing year's balance. And we have to write the retained earning, which is for 31st December 2024, not opening balance. Okay, so this is the authority, and now we have to write the current liability because we don't have the non-current liability. Current liability is trade payables and other payables, which is 75. This is the advertising expense which we need to pay. This is the liability, but we have written the 75 in income statement because this is related to 2024 year's expense. So now add the equity, which is 14072, and the current liability. So you have 16435, which is equal to total assets. So it means that this is right. Now the question is Zahara and Pania would like to expand the company and increase sales. In order to do this, they are considering increasing the amount spent on advertising by 100%. Advise Zahra and Pania whether or not they should go ahead with 100% increase in the amount spent on advertising. Justify your answers by providing 2 points in favor and 2 points against an increase. Okay. So doubling advertising spending can significantly increase brand visibility, reaching a wider audience and potentially attracting the new customers, leading to increased sales. However, allocating a significant portion of the budget into advertising means diverting funds from other potential growth in initiatives. So, in my point of view, Zahra and Panya, to exercise caution and do not increase advertising spending by 100% without further analysis. So, this is my point of view. Okay. So now we have the question number 2. Okay, so we have the second question. That Paul is a trader and he maintains three-column cash book, and Paul has prepared draft financial statement for the year ended 31st March 2024. Paul later discovered the following five errors in his accounting records for the year ended 31st March 2024. Okay, so we have these errors, and now what we have to do? Prepare a journal entries required to correct these five errors. Narratives are not required. Okay, so we have the first error: purchase invoice for $140 had been debited to the account for office equipment. So it means that purchases would be debit because we have to increase the purchases because we didn't record it, and we have to decrease the office equipment because we mistakenly debited, but now we have to credit it, and by crediting we can decrease office equipment. So yeah, so purchases, first error, purchases 140 debit and office equipment credit. Okay, and the second one, cash discount received, which is $18, so it should be carried. Had been recorded in the bank payments column for the cash book. Okay, so we basically recorded it as a bank payment. So it means that if we recorded it as a bank payment, so now what we have to do is we have to increase a discount. It means that we will be carried the discount received and we will be debit the bank account. So the second error, bank 18 debit, and discount received would be debit. And the third error, carriage inwards $82 had been credited to the carriage outwards account. Okay, so carriage inwards carriage inwards 82 had been carried to the carriage outwards account. First of all, we have to debit the carriage inwards account because we have to increase it. Carriage inwards would be expense for us. And carriage outwards. So because we credit the carriage outwards, we decrease the carriage outward. That's why we have to debit the carriage outward account by debiting it because we want to increase the carriage outward. It means that maybe, for example, if there is some balance written in the carriage outward account, but if you credited it, so it means that you mistakenly decrease the carriage outward account. That's why we have now increased it with the 8200, and also we have to increase the carriage inward account with 8200 $82, sorry. And where there is nothing on the carriage side, so there would be suspense. So the third error, carriage inwards, which is $82, carriage outwards, which is again $82, and suspense, which is 82 plus 82, which is 164. Okay. Error number 4, a payment for insurance 375, this should be debit, had been debited to the bank account and credited to the insurance account. Okay. So now what we have to do, we just need to make the double entry, because in insurance account we credit the insurance account with $375. Okay, we credit the insurance account with 375. If we now make the similar entry on the debit side, if we debit the insurance account with 375, so it means that it will cancel out each other. That's why we need to write the double amount here, 375 plus 375, so this is 750. And similarly, we will be doing the same thing in the bank account, because the same thing happened in the bank account. We debit the bank account with the 375, but we need to credit it. So now if we credit the bank account with 375, so it means that it will cancel out. That's why we need to write the double amount here. So we can, which is 750. So 750 and 750. Okay. So insurance and the bank. So insurance is 750 and bank is also 750. Now let's see the fifth error. Bank receipt column uh, of the cash book for Feb 2024 had been underscored by $90. So we undercast by $90. It means that we decrease the debit side of the cash book, and this is the receipt side. It means that we have to increase the bank column, and on the credit side there is nothing, so we will be writing suspense. So for fifth error, bank would increase by 90, and there is suspense on the other side, 90. Okay, now let's see the other question. Calculate the corrected bank balance and at 31st March 2024. Okay, so opening cash at bank balance as per draft financial statement, which is 3290, and we have to find out the corrected bank balance. Okay, so now let's see again. So if you see that error 2, error 4, and error 5 is related to bank account. It means that bank column. So that's why we will be rectifying the error 2, 4, and 5 in to find out the corrected bank balance. So here as you can see that we receive the cash discount, which is $18, but we didn't record it. So that's why we have to record $18 now. So we will be recording this one. This is cash discount, error 2, and this is $18. So we have to add this. Okay. And after that, let's see the error 4. So in error 4, if you see that we credit the bank account with 750, so it means that if this credited, so that's why we have to minus. We have to deduct it from the draft financial statement. So bank credit error 4. And the next error would be the error number 5. So as you can see that the bank has increased here, debit by $90. So that's why we have to add back $90 here. So 3290 plus 18 minus 750 plus 90. So we have the bank balance after correcting errors, which is 2648. Okay, now let's see the other one. Calculate the corrected profit for the year ended 31st March 2024. This is the draft financial statement 9268. And now we have to see. Okay. Mm, okay. So if you see that a purchasing price 140 had been debited to the bank of a account for office equipment. So it means that we didn't record a purchase invoice 140, but now we recorded it. So it means that you have increased your purchases. So if you have increased your purchases, so it means that you have also increased your cost of sales. So if cost of sales increased, so it means that it will decrease the GP. If GP decrease, so it means that it will decrease your profit also. That's why we have to deduct the 140. Okay. Now let's see the other error. Error 2. The cash discount received $18 had been recorded in the bank payment column of the cash book. Okay, so this is the cash discount received, and we know this is a part of your other income. So $18 will be add back. Okay. Uh, and if you see the error 3, okay, if you see the error 3, the carriage inward $82 had been carried to the carriage outward account. So this is 82. So first of all, carriage account, carriage inward account would it is increased, and at the same time your carriage outward account would also increase when you debited it. So it means that we will be deducting this $82 amount with the double amount from the profit. 82 multiply 2. So this is, as you can see, this is 164. So we have to deduct the 164. Okay. And now let's see the other last one error. Error number 5. So as you can see that our bank has increased with $90. Sorry, this is okay. So bank, yeah, bank would be the part of current assets, not the income statement. Okay, so if you see the four, error four, a payment of insurance 375 had been debited to the bank account and carried to the insurance account. But now we debit the insurance account and we know that insurance is the expense. So it means that expense has increased. That's why we will be deducting 375 from the profit, from the draft financial statement profit. So profit for the year after correcting errors would be 8232. Okay, so we completed question number two also. Thank God. Now let's see the question number one. Okay, so we have the final question, question number one. Okay, so Ado is a trader who only sells on credit. His trade receivables at first April 24 were as follows. So this is the trade total trade receivable which is 3658. Okay. During April 24, the following transactions took place, and we have to prepare a sales journal, and after that we will be, I think, posting the sales journal amount in the sale ledger account. Okay. So first of all, we have to prepare the sales journal. Okay, so let's see the sales journal first. So what happened on second? Sold goods to Ava. List price of 150 less 6% trade discount. So first of all, 150 multiply 6% discount. So this is $9. So we have to record it here. This is the transaction for 2024 for, and it happened on April 22, I guess. No, April 2. So Ava 150 minus 9. So you have 141. The second one, receive telephone transfer from Ava 689. So we don't need to record it. It is not related to this because this will record in the cash book. Sold goods to Nuru 165. Yes, we need to record it. Okay. Uh, on 13, receive check 667 from Mahira in full settlement of an invoice. Again, this is a part of cash book. And this would be the part of, yeah, I will tell you later. Received $760 from Nuru by electronic transfer. Nuru had deducted 5% cash discount. Again, this is related to the cash book. Nuru returned goods $30. This will not record in the sales journal. Sold goods to Mahira. List price is 480. Trade discount is 5%. Cash discount is 5%. Even if invoice paid within 30 days. Okay. So sold good to Mahira. And trade discount is 5%. So 480 multiply 5%. So this is 24. So now we have to record it here on 21. 21. What happened? We sold goods to Mahira 480 minus 24. So we have 456. Okay. Okay. So I think there's nothing. Rachel become bankrupt. Okay. So this is not related to sales order. So it means that we have to add this. So this would give you 762, and on 30 April we will be transferring to the sales account. Okay. So prepare a journal entry to write off the amount owing by Rachel. A narrative is required. Okay. So this is the last entry. Rachel has become bankrupt and Edward decides to write off the amount owing from her as irrecoverable. So first of all, we have to see that how much amount Rachel owed to us. So Rachel owed us 215. So it means that we have to make the entry irrecoverable debt debit and the Rachel is credit. Okay. Now we have to see the total amount of money which Ado received from the trade receivable during 2000 April 2024. Okay. So first of all, we have to, okay. So we have the multiple amount which we received in April. We received the 689. Okay. And after that we received the 627. Uh, and we received the 760. And we receive, yes, we didn't receive anything else. So we received these three amounts. So total amount received in April, 689 plus 627 plus 760 is equal to 2076. This is the total amount. And now we have to see the total amount of cash discount which Ado allowed in April 2024. Okay, so we have to see this again. Hmm. Okay, first of all, we received the check from Mahira. Invoice was 660, but we received 627. So 660 minus 627. So difference would be the discount which we allowed to Mahira. 660 minus 627. So this is 33. So first of all, write 33 would be your discount. Received 760 from Nuru by electronic transfer. Nuru had deducted 5% cash discount. Okay. So it means that now we have to see that what would be the 5% of this 760. We receive 760 by Nuru electronic transfer. Mm, okay. So 760 is the amount which we received after after allowing discount. Okay, 760. So we don't know that what was the actual amount we need to deduct before discount. So we don't know the original price. So we have to deduct the discounted amount from original price. But we know that the discount, which is 5%, it is also applied on original price. So original price multiply 5%. So we don't know what is the original price. We are going to write it x minus OP is also x multiply 5%, 760. Okay, so x, if you just consider x with 1 minus x multiplied by 5%, so this will give you x with 5% is equal to 760. Now convert this 5% into decimal. 5 divided by 100, so this is 0.05. So 1 minus X 0.05 is equal to 760, and now deduct 0.05 from 1. So 1 minus 0.05, so this is 0.95. X is equal to 760. So since we need to find out the value of X, the original amount, so X is equal to 760 divided by 0.95. So 760 divided by 0.95. So this is okay, so where my question gone? Yeah, here. So X is equal to 760 divided by 0.95. This is 800. So 800 was the original amount, and she paid us 760. So it means that 800 minus 760, the $40 was the discount. Okay. Um, so now this is very easy for us. We need to find out the total. We find it out. Okay. So total cash discount is equal to $40 plus 33 is equal to $73. Okay. Prepare the ADOS sales as a control account for April 2024. Okay. Okay, so first of all, we have the balance BD, if you remember, and the balance BD was at the starting of the April. If you see again, this is 3658. This is the balance BD. So this is the trade receivable at first April. So 3658 is the balance BD. So on 2024, April 1, so balance BD would be 3658. 3658. 3658. Okay. And after that, there are sales transfer, I guess it was the, just give me 1 second so I can check. Yes, 762 is it is transferred by the sales journal. So we have to write it here. It is the balance of 30th April sales 762. Okay, so just give me 1 second so I can just plug in the charger in my laptop because it is going to end, its battery is going to dead. Okay. Uh, okay, so on the credit side, first of all, we have to write the sales return. Okay, so yes, so as you can see that we have the sales return, Nuru return goods, which is $30. Okay, so we have to write it on the credit side of the sale at the control account. So 2024, April 30, so sales return, just $30. And now let's see that how much discount we allowed. We allowed $73 discount. Okay, so we receive discount allowed. So discount allowed debit, say the control account credit. This is 73. Okay, and also there's a irrecoverable debt which is 215. Yes, bad debts which is $215, and also we received some amount in the bank, and we also calculated it here, and this is 2076. Okay, so now we have to just calculate it. So it will be giving you the answer 4420, 4420. So this is a short side. So balance CD is 2026, and we have to write it here. My first balance PD, which is 2026. Okay. So Ado is considering changing his credit terms. He would introduce more credit checks on new customers and would increase cash discount to 7.5% for payment within 30 days. Okay. So what we have to do, we have to advise Ado whether or not he should make these changes to his credit terms. Justify your answer by providing two advantage and two disadvantage of changing his credit terms. So I think I can explain you this theoretical question without writing. So if you just see its advantages, so we can say that if he would give this discount, so it can, your more customers may pay early because of extra discount, and it can improve your liquidity, and it can also, increase your credit check indicates ability to pay. And its disadvantage would be that you will be less profit on each sale, profit of the year will be reduced, and there's no guarantee that customer will pay early. In recommendation, I would say that okay, he should not give the discount, because as you can see that there's irrecoverable debt which is $215. So it means that it is not, it is not suggested that, no, sorry, yeah, I just screwed up. So there is a bad debt of $215. So it means that we should, give the discount so that a customer can pay us early, and we can prevent from the bad debts. So like Ado can prevent from the bad debts. So this is the recommendation from my side. Okay. So I just completed this video. So I am going to end this video, and we will meet in the next video with the new paper.